I'm Joseph Wolf, CEO of EFG Wealth Management Israel.
And I am Michael Dadoun, Head of Private Banking at EFG Wealth Management Israel.
And this is Market Makers IL, a financial podcast where we bring you conversations about shekels and stories about success in the Israeli market.
But let's be clear, this is not investment advice, and the conversations with our guests should not be taken as advice either.
So Michael, we actually mentioned Jack on one of our prior episodes. He introduced us to Omri Dekalo of Ubeya.
Oh yeah, I remember that was a great episode with a great business model. I was thinking of them actually when I was watching recently the Wimbledon final,
which was a lot of fun. I even watched it this year. So we've got big shoes here to fill, Jack, but I'm not worried. How about you?
I'm never going to try to fill the shoes of one of my founders. That much I promise you.
There you go. Staying on brand, as we were talking about. So welcome, Jack Levy, to Moneymakers IL. Jack is one of the first people I met when I moved to Ra'anana. I count him among my close friends. We have sons who were best friends in grade school, and Jack coached many of the sons of Ra'anana in the local baseball league. But we're here to talk business. Maybe that will be business someday. Jack is an alum of Ivy League schools who maybe we don't want to name these days, but he went to Harvard and Columbia, some order. One of his classmates, I think, is a Supreme Court justice.
That's
so
true.
He's been at some large firms. He's done some interesting things. He participated in the tech bubble back in the US with a listed company. He's been in a VC since he started a VC in 2005. He's in a new iteration of doing some new things that we'll have plenty to talk about. But let's start with walking us through the Aliyah experience, Jack, the challenge of opening up your own company. I've got memories of you sitting in these coffee shops around on with a laptop, putting stuff together when I just moved in. And so we'd love to hear how you got to where we are today.
So first of all, it's great to be here. Thanks for having me. Yeah, we did. Mayor and I started Israel Cleantech Ventures in 2006. Is sitting in Cafe Joe. That's exactly right. But I'll just go a little bit earlier because you asked about the Aliyah. So I think I got the Aliyah bug probably in college. I actually just saw one of my college classmates here down in this office, and there's a bunch of us that were around Harvard Hillel at the time in the late 80s, the early 90s that made it to Israel. But then it takes time to get here. First you go into debt, you got to get out of debt if you get a law degree and all of that. And I had, in 1999, as you alluded, I got recruited into an internet company. And so that was an amazing experience. I think that also sort of took me away from law, even though I was the general counsel of that company, a company called Register.com, which indeed IPO'd in March of 2000. That was an amazing experience.
Timing.
Yeah, it taught you the business lesson, that timing is the one thing that you cannot control. But if you think you have it, you have to move fast. And let's just say between November of 99 and March of 2000, I did not see my family much of it at all, but we got it done. 4 years at that company. And I think as our oldest was going into kindergarten, we had heard, get your kids to Israel for kindergarten. It's the best part of the education in Israel, which I think is right.
That reverse pyramid.
Correct. I think it's a parabola, right? Because I think the postdocs are also excellent, right? So, that's, that and Dahlia finishing her PhD sort of dictated the timing. And when I came here, I really wasn't sure what I was going to do. I got recruited to potentially join a VC fund. And that was interesting. I'd never been an investor before. I'd been a corporate lawyer, and I'd done a lot of venture capital deals for Warburg Pincus and others. And then I'd been 4 years at a very successful company. So I'd been through that process. I'd been to 50, 60 board meetings. I'd been an advisor to a CEO. So this fellow, Shlomo Kalish, a name you probably have heard, who used to recruit a lot of Anglos as they came over here, including my two partners, gave me an offer to join his fund if he was going to go raise it. And Mayor and I were in that slot. And then in the end, he didn't raise it. But Mayor and I started talking, what would we invest in? Mayor, like you, was an equity analyst, and he had this famous line that you have to make an early non-consensus call on a mispriced security, something to that effect, right?
Sounds like Mayor.
Sounds like Mayor, sounds like something and we thought that Climatech was that. In other words, it was early, it was beginning to develop in the United States. Nobody in Israel was looking at it. We started visiting all of the companies that we could find in Israel. In his old station wagon, we would drive all around the country. A lot of them were periphery type companies. They'd been formed in incubators by former Soviet engineers, that kind of stuff. And we really thought it was just a lot of amazing tech, but it was very, very raw, and it's a good opportunity to get into early. We realized this is an important lesson for all emerging fund managers. The only way you can really raise a good size first-time fund is if you've managed a fund before. It's a bit of a paradox,
Exactly.
right?
Yeah.
So we brought our third partner, Glenn Schwaber, over from JVP. And then we were off to the races, and we got the fund closed in the beginning of January 2007. And then we finally moved out of the cafes of Ra'anana and into an office in Kfar HaYarok, actually. So
Staying on brand again.
yes, we did. We had peacocks sort of riding around, and there was an incubator in Kfar HaYarok, which was interested at the time at starting like a venture studio, which comes back to what I'm actually going to start doing soon, but helping to launch companies in that area as well. So we weren't the only ones that were thinking about this area. That was
There was a guy who had done a big exit.
correct, exactly. It
Who
was the
had an
Chromatis guys.
office. Yeah,
Exactly.
Chromatis.
Exactly. So it was Rafi and Orny, and Glenn from JVP had been an investor in their company. So they said, hey, why don't you guys sit here with us? And it was great. We had a great ecosystem until it turned not so great. We will get to that later on.
So you were, it's reasonable to say that you were maybe an original in clean, green investing space. You know, how has that changed over the years since you started more than 20 years ago, almost 20 years ago?
Yeah. So it started, when we started, Al Gore had only recently released, his movie. And I think that really raised a tremendous amount of awareness. And
There's a great Andy Kessler piece just yesterday
about the inconvenient truth.
how Europe lost and the United States won because Europe actually listened to Al Gore.
That's interesting.
But perhaps that's a topic for
So
another time.
I haven't read the piece, but I definitely will read it afterwards. I think it got a lot of attention in Silicon Valley. There's a very famous video of John Doerr, the legendary investor invested in Google, right? That's the beauty of our venture capital business. You can make like one amazing call and then you're a legend. And it's true. That's the way it works. And he was talking about, and he started to cry, literally talking about how he wants to move the firm into Cleantech for his daughter's sake. And there was a big boom from 2000. It started a little bit before we raised our fund. We rode that in a sense to get our fund raised. And I think a lot of things from that, if I look back from that moment until now, if you look at the end markets, if you look at the adoption of solar, if you look at the adoption of electric vehicles, right? I'm talking about before Tesla, right? And before, we invested in Better Place, right? Legendary. So if you look at the adoption of, at the end markets, it's all gone up and to the right. These markets have gone from several billion-dollar markets to tens of billion to hundreds of billion-dollar markets. So on the one hand, we were right. On the other hand, penetrating tech into these markets is extremely choppy, extremely difficult for all sorts of reasons. And just around the middle of my sort of career in this, around 2012 or so, after some large-scale failures, Solyndra was the one that you may even remember because the Obama administration had lent them a bunch of money, and then 4 months later they went bankrupt. So it became a big political issue. Of course, the Obama administration also saved Tesla. Everybody forgets that, right? But the capital just like ran away. And so for our first fund, from when our company started to scale from 2012 to 2018, 19, nobody was doing Cleantech or Climatech anymore. And we had to pivot. And so we started doing sort of other things. What I've started to see again since 2019 is that I think it's back. It's of greater interest. And maybe to summarize, to use an analogy, if John Doerr was the guy that sort of launched it back then, this time it was Larry Fink. And he's managing a little bit more capital, than John Doerr is, with all credit to John Doerr. But I think that's the point. It's here to stay. It's massive industries now. It's not, yes, it's a theme. Yes, it gets tied to politics. Yes, it gets tied to a lot of politics around global warming. But climate change is somewhat clear. The biggest managers and allocators of capital in the world are focused on it. And that's what's exciting to me about it at this moment in time.
You touched about raising the fund. Means you've run into a whole bunch of different investors. You mentioned some of the big ones on the VC side and even on the public invest market side with Larry thing. And how, attitudes change, taglines change, meaning what's the hot topic for investing. But how has your relationship with investors changed? You've talked to a lot of people. You've raised a couple of funds at this point. What's the mindset, and how has that changed or stayed the same?
So I'll answer the question by thinking a little bit about storytelling, because storytelling is very important when you're raising capital, right? But at the same time,
We just have to interject. If you want to hear a lot about storytelling, go to episode 4.
Oh, excellent.
Market Makers IL podcast with Brachi Sprung.
Oh, yeah, fair. Okay, that's good. That's good. Yeah. So I think storytelling is critical, but much more important than storytelling at the end of the day are results. Right? Exactly. And so I think in the beginning, we told a really good story. And unfortunately for that first fund, the results were not good. Now, we survived and continued to raise capital because, we, I think, have a good reputation of always being forthright and doing our best. And we had a great reputation with our entrepreneurs. Also because we pivoted, okay, which helped us, and realized what the flaws were. And so, some of those investors have really stayed with us over the years. And that's like, I think, you develop friendships, of course, as well. But at the end of the day, they're looking for outsized returns. And you have to go in this early capital, you have to go where you can find them. A whole different story about how venture capital has changed over the past 20 years. And I think there's a tremendous amount of change that's happening now within venture capital, which we could talk about, but it's a little less interesting to me. But, now the buzz is everybody's talking about like, oh, what's your $10 million of revenue per employee? And I'm like, okay, maybe, but for how long, right? I think at the end of the day, what always motivated us and our investors is really trying to create long-term successes, businesses that last, businesses that make a real sustainable impact, but in a way that really, really, really makes you money. So businesses with high margins as well, businesses with repeat business models. That's what we've been looking for throughout these 20 years in different iterations.
What does your deal flow look like? How is your approach to investment selection?
So that's also interesting because it's changed over the three funds. In the beginning, I think when we were very sort of thematically focused, okay, Israel, Cleantech Ventures is what we called ourselves. It was very clear. We really did a great job with that brand, and we got every single thing that moved within Cleantech made its way to us. And I think one of the things that we learned is just because it was the best thing in Israel and Cleantech didn't mean that it was necessarily something that you should go into, right? And that's a problem with having a very sort of, it wasn't such a narrow focus because Cleantech can be very broadly defined, but the problem is that you sometimes just believe your own story and you have to take a step back and say, wait a minute, which we did toward the end of that first fund and say, wait a minute, is this working in general? As we then got a broader focus, we already had a reputation, I think, as being really good partners to founders. And we just followed that reputation and let that reputation lead us to our best deal flow. So you always get a tremendous amount of inbound deal flow. The question is really, who is sending you somebody before they're raising capital because they like you and they want to do a favor for their friend? Which of our founders are basically referring us deals because they have a friend who's founding a company and they say, these are really, really great guys to work with. And so over the years, we ended up going into much greater areas. I currently now sit on a board of a biotech company, and I sit on the board of an insurtech company, and I sit on the board of an internet-related company. So I obviously lost, in a sense, my thought leadership in a way, but at the same time, all of those came from really trusted referrals. I got early looks at those deals. I had the opportunity to evaluate them before they were in the market and to kind of jump and preempt them. So,
if I'm not mistaken, your fund is not on the largest scale, and just in terms of number of employees in the fund, I know you had two other partners to start, maybe a couple of people working, but not a team of juniors running around doing stuff. So you all work together. How did you balance kind of what you were looking at? How did you work together? How did you work apart? Like what was that like?
Yeah, so I'll say two things about it. First of all, we have an amazing CFO. Leila Frankel, we had her, I think even before Glenn, or just around the time Glenn was joining us, she joined us as well. She took a big chance with us. So it meant that everything back office related, and that part of the business, as you guys know, has also really changed. There's a tremendous amount of compliance, even for a small fund, right? The moment you have a fund structure, and that's amazing. So whatever Leila says, we don't have to worry about that. And then, I talk a lot to young people who often come to me because they want to be venture capitalists. And I generally say, start somewhere else. Even if you want to be an investor, start somewhere where you make a decision and you can see an outcome within a 3-year period, not like in a 15-year period, right? But what I often say to them is I make the difference because I was 4 years at register.com. I was at a company and I've been at partnerships. And I liken a company to an organism, to a cell. where sort of like each part of the company is an important part of the cell. And if that's not working, the cell will die. If you don't have, the mitochondria or the ribosomes or the nucleus, the cell will die, the membrane. If you don't have sales, marketing. And I used to give a tour of Register also. I'll never forget. I used to walk around, and whenever I'd get to the guys that were doing ad sales, I would kind of bow down to them, right? They were selling a little banner on our website for $500,000. So a partnership is different. A partnership doesn't operate that way. Mayor can do an incredible deal, and I can do a whole bunch of bad ones, and we can make money for our investors. And it's very strange and different. And I think that over time in a partnership, you also learn who's better at what. And so there have been deals which somebody else sourced, but then I took the board seat from day one because maybe they were better at sourcing and I was better at coaching and working with that. Or anytime, we have to do a deep dive into, unfortunately, a recap, which happens every now and then, I'm not going to do that without Glenn because he's just lived this business for 30 years. He's seen every aspect about that. I think, and one of the things we said in a small partnership is we want to have a culture where it's not Jack's deal, it's not Mayor's deal, it's not Glenn's. It's kind of impossible to do that because the reality is you do develop these relationships with the entrepreneurs. And like I said, it's more point to point and you're out there. I said once, I remember also to my kids when they were a little older and they picked me up from work because they were using my car, and I saw that they played tennis together, right? As one does. And I'm sitting in the back seat of the car, and they're sitting in the front seat having played tennis. And it just occurs to me, I said, you guys are like my founders, right? I invest everything in you. I care most about you. You're everything that I want.
Where's my return?
No, you don't. No, he said, you don't even invite me to your fun days, right? I'm not really a part of your team.
I wish my Yogi Bush.
Yeah, what's the story over here? I had one company, Weisberger, where they invited me to the fun days. And even them, one day, all of a sudden, I see on LinkedIn, they're all in a swimming pool. I'm like, hello? So, I think a partnership works more point to point, and then you come back together and you make decisions together. A company works more as a team. I think it's a very interesting cultural difference when young people are thinking about environments they want to work in.
Interesting. Tell us what you're up to with the fund right now. I saw an announcement last week that you were partnering up with the Epsilon Fund.
Yeah, so we actually, myself, Glenn, and Mayor have decided that we're not raising a fourth fund. Everybody got different interests after the seventh, obviously, in good ways, serving the country. Glenn's very active right now trying to help businesses in the periphery, non-tech businesses in the periphery, and he took an interest in that. And I got the Climatech bug again. So we have a long time that we're still going to be managing out our portfolio, obviously. We'll be together, another 10 years or so, if not more. But at the same time, we have new time, and we have time on our hands to do new things. And I am going to be devoting probably about half my time over time as time goes forward to Epsilon. Uriel Klar sort of is, I think, the second generation of the Climatech leadership. If I was the old generation, I'm 19 years older than him. When I sat down next to him for the first time, I said, oh my God. I also had a partner, Arnon Goldfarb, who was 19 years older than me. I'm like, I'm Arnon and you're Jack. That happens. He helped create he has a different model. He has a venture studio model where he really helps create the companies from the get-go. And we have a small equity position in every company that we found. We get founders equity sort of from day one. And that's very exciting for me. It's, not always having to, don't have to have a formal board relationship. I'm not always having to worry about the LPs that are with me. We, more sort of on the founder's side, even from what's the initial valuation? I mean, I don't want a crazy valuation because it's stupid for the company as well, right? But like when you're out there helping them raise capital. So we have a program where we work with 2 cohorts each year, 30 potential founders. Not all of them, of course, will succeed. Not all of them will want to succeed after they go through our program. We teach them a ton about climate tech. Some of them come in already with their idea. Some of them come in looking for co-founders, and we bring together a real interesting mix of tech people, material science PhDs, and business leaders, all of whom are passionate about climate tech. And that's what I'm most excited about. Again, going back to your other question about this time around, some of Israel's best and brightest are interested in these areas right now. And I mean, the Talpionim, the 81 people, the 8,200 people, and the average age, by the way, of the people that we're working with are like 40, 41, 42. We had 2 people who were 20 years in security services and now wanted to do something. A woman who was at Google for 12 years and now wanting to lead something. So it's working with amazing people, helping them ideate, helping them find co-founders, and then ultimately also helping them find capital. And yes, we will have the right to invest as well. It probably will morph into some form of a fund over time, whether I like it or not. But for the time being, it's very exciting, and Uriel's a terrific partner. So that's a new thing for me, which I mentioned. But we have plenty of work to do still in MoreVC as well. So
we were joking about this as we started, and I kind of mentioned it in the intro, but it sounds like this is Jack the coach.
So I think that's right. I think I've learned a lot about myself over the years, and I think that that's where I excel. Sort of taking that role of really, it's not even necessarily mentoring, because mentorship sometimes means helping people do things that you've done, right? It's not. So I'm not just like I never really played baseball particularly well.
And you like the Reds, which we still can't figure out.
That's true. That's a legacy point. Yeah, helping people through really, really important decisions. I think back even to my moment at Register. I came to the company and I was there to help take the company public. And I came from the Wall Street law firm Wilkie Farr, and the company was a tech startup. And I was, one of the first things I did is, let's turn this into a public company board. Let's get this guy on and that woman on and this person and that. And the one person that my founder was never going to let off his board was who? It was his first seed investor, Niles. And Rich was like, and I'm like, why is Niles still on the board, Rich? And I hope Rich listens to this podcast. Hopefully he'll remember it. And he'll say like, are you kidding me? Rich has been with me. You know, he was with me in the bar when we almost sold the company for $1 million to IBM. He knows everything that's happened here. And that's the role that I love most about the early stage investing. And now I get to do it also in Epsilon, you know, not even necessarily deploying capital. Like I said, they will probably, you know, ultimately, if you have great deal flow, then you should try to find investors for it as well.
So part of this is kind of like falling in love early on, where you see this great idea and it's going to work. Talk to us about something that felt like that, but just didn't work.
I can talk a lot about things that didn't work. I mean, sometimes early stage investors fall in love with the team and the technology and don't necessarily think enough about the business model in the market. So I can, you know, we had this one company. I won't say which partner brought it in, right? Because I just said earlier, we don't say it was his deal.
One team, one dream.
One team, one dream. There you go. I like that. But it was about built-in photovoltaics. So the idea of integrating the photovoltaic material into glass, into the sides of buildings, it makes tremendous sense because of the area, of the sunlight, of the, you know, you start doing the math and you're like, even with low energy conversion, because you're not going to get the same 22% or whatever that you're going to get on the photovoltaics on the roof, you're going to get a lot less. But even so, just because of the sunlight, and if you do it in a way that you could also cause shading, so you're keeping your building cooler, you're generating electricity on the side of the buildings. Two amazing founders, okay? Gonen and Itai, they were fantastic. Of course, Gonen went on after this company failed to found a cyber company, and it exited like within a year, and Globes put a picture of him holding our solar window in the picture. I'm like, no, that wasn't my exit. We got the product into the Sears Tower in Chicago. We got it into Google because Google's like Mikey, right? Google will try anything, right? And we got it into Stony Field Farms, but there just wasn't a real market pull for this. There just wasn't. It was a little way ahead of its time. That was a great idea. And we had good investors alongside us, Evergreen, Patango, and the company failed. But amazing founders who went on to succeed right afterwards. Way ahead of its time, but like really way ahead of its time.
And what about a less promising idea that somehow surprised you?
So I'll talk about a success. Yeah, a success that I had was with a company called Weisberger. Amazing founders. We sold the company to AB InBev. The company started with an idea that was really less promising, and we sort of invested in anyway. They basically wanted to measure the quality of your beer by putting something like a flow meter in between the tap.
This sounds like something that you came up with in a frat.
But what we saw within them was the data behind it, right? That was the thing. It was sort of, so they had this IoT, right? That was back when Internet of Things was the thing. And they had this great little device. And at the end of the day, I think you learn like installing little devices in lots of different point of sale places, that's not a good
So where
idea.
did they put the device?
They put it literally between the keg and the pour. Like, so they were monitoring the quality. They were monitoring the quality of the pour. They were, of course, giving you data around it. But then we realized very quickly, wait, this is just all about the data. This has nothing to do with the IoT device. And so to give them credit, they just completely pivoted. They went right into the point of sale systems. They managed to do these business deals where they got their data and they put the analytics on top of it. And then AB InBev were like, wow, this can basically help us understand how people are drinking our product, with what foods, at what times, what incentives should we, what marketing programs should we give our pubs and our restaurants to say, hey, at this point in time, you should offer this combination because that's going to drive things. The CEO of AB InBev took an interest in our company. At the time, they were buying SAB Miller, which was like $100 billion transaction. And I'm telling you, the senior executives were spending as much time on, the tens of $1 million acquisition of Weissberger because they thought it was so visionary. So the idea that they started with was just awful at the end, but they realized it very, very quickly. And that goes back to, teams being able to leave a good idea and adjust. Yeah.
I think this is something I hear all the time on a podcast that I listen to all the time called Acquired. Where I think it's a quote from Jeff Bezos from Amazon, which does it make your beer, focus on the things that make your beer better, which is keep your eye on the target and don't do the things that don't matter to you, but feels like it fits in.
I mean, as going back to your public equity analyst days, nothing that I enjoyed reading more than his annual letters, right? And it is day 2, right? I mean, he really nailed that.
So let's talk people, you've got money, you've got ideas, you've touched on all 3 of them. What's the recipe that makes this work when you look at things? Because a lot of people say buy the management, a lot of people say buy the ideas, and you're like, you've talked about the product. So what's the answer to the?
I have failed because of all of those, right? I've sometimes chosen the wrong people, although more rarely, I think that because we put such a focus on that. I've certainly failed because money wasn't available. Sometimes, by the way, having only to do with the macro and not having to do with your own story. And certainly the idea, but you can adjust. Look, as an early stage investor, and now that I'm involved with company building, I'm 90% focused on the people at my stage. I think that as you get later in the life cycle of the company, people become hopefully more replaceable in a sense because the business model is humming along and the business model works. I saw that with Register.com. I mean, we had $100 million business and it was so good in a way that the worst people couldn't have ruined it, right? So we made some bad decisions at that point in time because we were a public company. We were afraid to cut our prices. We needed to cut our prices dramatically. Had we done that, GoDaddy wouldn't be in business. And we were afraid to do that. I was afraid to do that as a public company, and we should have. But the business was so strong. So I think as the business matures, there's nobody who isn't replaceable. I think that one of my old college friends, actually, Mike Dorff, is one of it's funny I think of him, like he's a law professor and he's one of the guys that focuses most on the executive compensation of public companies and how out of whack it is and how public company boards think, oh, our CEO is not replaceable. And he's just like, that's absolutely not the case. But I think that founder at the initial stage of a company really can be irreplaceable. So.
Joseph tells me that you're somehow somewhat of a classic liberal. How does that affect your definition of success?
Oh, that's an interesting question. I think I am a classic liberal. I studied political science. I'm a Rawlsian, if that means anything, like sort of, thinking about the distribution of wealth and how, not a socialist, right? Rawls rejected socialism and communism and sort of wrote a classic liberal theory of how we would allocate resources in a just society. I think certainly my own vision of success, I think, is therefore defined on something that's broader about success of your community, about success of your world, and I think maybe even success of the planet. I think as I related to Climatech and Cleantech, I think if there's, I've had the pleasure of sometimes interacting with really some of the wealthiest families in the world, not necessarily as my own LPs, actually, more LPs of, other funds in my area. And I think it's not a surprise that these people that have created generational wealth throughout the 20th century, some of their scions have now looked at their businesses and said, we did a great job for everybody, for shareholders, for employees, and, for customers, but the planet suffered because of externalities. And they want to sort of, it's not like to make up for that, but they want to try to create a world where the planet, that externality is brought in. By the way, that's the role of government. That's what I was taught, even by a very conservative economics professor, Martin Feldstein, Ronald Reagan's advisor. He even said to us, the externalities should get priced in. Carbon should be priced in. I mean, it's obvious to me. Carbon will be priced in at some point in time. But until that happens, I think some of these families are defining success as not just, doing well for your customers and your employees and for your shareholders, but also for the planet. And so I think that's maybe a liberal outlook a little bit on that climate issue. Is you want to leave a lasting, at the end of the day, you're thinking about a legacy, and you want your legacy, the fact that you've created jobs for hundreds of people, thousands, millions of people. We're talking about a couple of companies that have 500,000 employees. That's an incredible legacy. But you also want to know that if you've made that company more sustainable from a resource perspective, then that's even multi-generational impact.
We're going to get a little bit personal, but you recently lost your father. I've heard his Jewish story, which is not a classic Jewish story, but it is in some ways, yes, a classic Jewish story. He ended up in Cuba, was caught in the U.S. during the crisis, and ended up, I think, with almost nothing, and built a life for you and your family, which I think is built on a business acumen. And I'm wondering just some lessons perhaps that you've learned from him that you've taken into your own business career.
Yeah, wow. I feel like that moment in where it's the in that movie with Jerry Maguire where you're Roy Firestone, like, don't make me cry. I'm Cuba Gooding Jr. Don't make me cry.
We can always cut the tears.
Yes, indeed. My father came from Cuba because they shut down the university because of the revolution. And he studied chemical engineering at Louisiana State University. And I'll tell one story, which is the story of both understanding how to get a job. This is good also for the young people, your young listeners. His grades were okay. He was a new immigrant. He had to learn a whole new language, right? And his grades were okay. And he realized as he was interviewing, and believe it or not, we actually found, my father was a bit nostalgic, we found his legal pad with the list of companies that he was interviewing with. And it was a list of America's oil and gas companies, chemical engineering, and plastics companies, DuPont, material science companies. And he was not getting callbacks. And he had a thick Cuban accent. Maybe he was... maybe it was, I wouldn't call it discrimination, but a little bit of bias, who knows what. And he realized this is not good. If I don't get this job, I go back to Cuba. I need this job to stay here. The revolution already happened. I need to bring my parents over here. And DuPont was coming to interview. And I know this story extremely well. He went into the Louisiana State Library. He went back 10 years and read every quarterly report of DuPont. And he also said that he was an immigrant. I think being an immigrant is a little bit, we're immigrants here also. It's a paradox. You're on the one hand, extremely confident in the sense that like you have nothing to lose, right? And you're like, oh, I can try anything. My father had an incredible daring and risk-taking aspect to him. On the other hand, you're really nervous because you're like, well, especially around authorities, right? If you can, but you're also a little nervous because you're an outsider. And I think he realized he had to be much more confident in that interview. And the DuPont guy came in and he said, I have been waiting. I have ignored every other opportunity. This is the company I want to work for. I know everything about your company. And wow, that changed everything. They flew him up to New Jersey. He got a job in the Parlin plant, and the rest, as they say, is history. And he lived the American dream. Like that, within 20 years, he was the president of a public company from good hard work in that. By the way, in an area which no longer exists, photographic chemicals.
Oh, that's a nice story.
Yeah.
So you are the second generation moving from old chemicals into Cleantech.
Yes, no, there's no doubt that some of the things I've done, and I used to talk to my dad a lot about things. And I think my father was always nervous because he knows how hard it is to take a new technology from a lab stage and build a plant around it. But yes, I think to some extent I was digging the same wells as my father in that regard, or trying to.
So last question from my side. Can you give us some optimism for the remainder of 2025 and Israeli tech?
Definitely can. I'm beginning to even hear it a little bit. First of all, I think we all hope that maybe this week, I know we say it often, but every week we say, we all hope that maybe this week there's going to be some resolution or the beginning to the end, if you will. But I am beginning to hear it again in the business community. People are really talking about a boom. coming out of this, a founder boom, right? There is a baby boom, by the way, that I know.
For sure.
I spoke to a woman who's a midwife. She gave me the statistics on it.
Oh, yeah?
Yeah. I think it was in her hospital from 260 to 420 on a monthly basis, if I remember correctly.
Wow.
Yeah. That was an interesting data point. I think that there's definitely a startup boom. I see that now in Epsilon. The founders that I'm working with here and their resilience, but their motivation, their drive, the problems that they're tackling. I mean, we have founders now that are working on the wildfire problem, working on the flood problem. I mean, these are massive business problems. They're not just societal problems. These are massive business problems. This is about climate resilience, right? More and more money is just getting allocated to solving these problems. And it's just terribly exciting to see these founders think completely like Israelis, completely out of the box. One of the companies, Fire Dome, is literally using like an Iron Dome approach to send flame retardant chemicals to the periphery to protect your important assets. Earlier on, this woman from Google who's been thinking about the flood resilience. So I see amazing Israeli founders gearing up to start, hopefully world-changing companies. And I think the biggest thing that we need is to refurbish our brand a little bit. Okay. I think that that's going to be a lot of hard work, but I think that we can do it, especially around the stories of some of these founders. Flights have come back. Hopefully they'll stay back, which means that the investors and the global partners will be coming over here. So yes, I am optimistic. If you would have asked me that question about a year ago, I would have probably talk to you about the pain that some of my companies were suffering through because they couldn't, get out as often to see their customers or because their investors weren't visiting here. But at this moment, I feel like there is a buzz that's developing. So, and it's not just the big cyber companies, which is wonderful, but that's an area that's,
We all know about that.
Yeah, exactly.
So let's have a little fun to end the conversation.
It's been fun for me. So.
We'll go to the lightning round.
Okay.
4 questions we ask to end each episode. Worst career advice you ever received?
So this is a little unfair, but I'm going to go back to my father because I found a letter from my father telling me to stay at the law firm and not to join the VC fund. And I think to start the VC fund. And I think the reason that he wrote it was we were struggling at the time at the beginning. Glenn hadn't joined us yet. And as daring as he was about his own career, he was conservative, sort of in a sense maybe about mine. He's like, you're a good lawyer. They like you. It was a lovely letter and I ignored it.
Here we are. If you have a personal business icon.
Well, then I got to stay with him, right? I'll say one thing also because, one of the things that I learned also from my father's business career, he traveled a lot in international sales, traveled a ton to Europe actually. And, they'll appreciate this. What he would always route, he had to travel to a place called Osterode, which back then was on the East-West German border. There was a plant there. But he would route himself in and out of Zurich so that he had enough time to get to Bahnhofstrasse to go to Sprunglies. Because Sprunglies didn't exist in the airport back then. Now it does. And anytime I passed through the Zurich airport, I would always take a picture of myself in front of Sprunglies and send it to the whole family. So I think my father also appreciated that business is also about relationships and it's about the people you meet and the stories that you can tell. And so, yeah, I think he's my icon in that regard.
So Joseph and I are pretty familiar with Sprungli.
Who of course you are.
Exactly. So now we know your favorite Swiss smack. What is your favorite Israeli smack?
Sabich Frischman in Tel Aviv.
In Tel Aviv.
Yes.
In the Shuk? In Levinsky?
No. On Frischman and
Frischman,
yeah, that's my favorite. Yeah, I love it. Yeah.
Good answer. What's the last thing you changed your mind about?
Interesting. You started off by talking about Harvard and Columbia. I was defending them a lot. And I've spent a lot of time talking now to young people that have been there. And I really think that I realized that how problematic some of the environment is. And I mean within the academia. Like I just spent the weekend with a woman who's getting her PhD in philosophy in Harvard's department. And she was talking about how she feels academic isolation from her peers. She's a Biden Democrat, right?
She's feeling isolation.
And she feels isolation. So I think 2 years ago, I think I was saying, what are you talking about? It's a very different, these places became very different over the past 20 years. I don't want to give up on them. I want to engage with them. It might take 10 to 20 years to change them back. I hope it can happen. because I have friends who are saying that's just forget it, Jack. Send the kids to YU, bring the kids over here, do this, do that. I don't want that to happen. And the kids that I know that are at these places, and I have a lot of kids of friends who are there, and they're fighting the good fight, and they're still getting great education. I think they're meeting amazing people. But my mind was changed about what happened over there, and it was problematic in terms of just dogmatic, illiberal in the name of liberalism.
Jack, it's been great. Thank you very much for participating.
This is a lot of fun. Keep it up. I've become a listener now as well. So thank you for having me.